But let's focus on the market, stay with the markets. Anuj is here with how he's looking at the market. Anuj, good morning.
Good morning, Prashant. You know, you and I both were there when we had this 2008 kind of play out. If we had this kind of screen, global screen in 2008, the Indian market would have easily fallen 10%. But it's the strength of the inherent strength of the Indian market that we actually fell the least. If you look at our peers, and after 10,000 crores of selling, Nifty fell 2.7%, which is really par for the course. As I said, in 2008, in such a scenario, we could have easily fallen 10%. Now, for the morning, at least the cues are looking slightly good in a sense that it looks like we are in for some short covering bounce. Whether it sustains or not is the big question. The put-call ratio at the zone of 0.72. Global screen looking much better today. Of course, the big question will the recovery last? And the most important cue last night was the US CBOE VIX. Intraday, it went to 66 from I think 23 or thereabout, and then it cooled off and closed at 38, signaling some kind of intermediate bottom in the US market. And that's the cue that the Japanese market and the Asian markets are taking, with the US futures also being up. And most of the markets today are up. Look at that number, 10,074 crores selling by FIIs, but all of it dollar to dollar absorbed by DIIs, 9,100 crores. FIIs also sold in cash in index and stock futures, 2,400 crores in index futures, and sorry, they bought in stock futures about 1,390 crores. In terms of positioning, 11,000 long contracts were cut yesterday, and about 23,000 shorts were added, which means that we are now at 60% net long. Remember, we were at 1.88% net long. We are now down to 60% net long. And in terms of contracts also, it's about 1.1 lakh contracts. Coming to levels now on the Nifty, the first resistance would be 24,300 to 24,350. Yesterday's double top on the intraday chart. And then 24,450 to 24,550. That's where option writers are placed. And that's where the most important level, the 20-day exponential moving average, is also placed. Support comes in at 23,900 to 23,950, and then 23,400 to 23,500. And the bank Nifty has been quite weak for last few days. It closed below 10, 20, and 50-day exponential moving average, and just somehow defended the 100-day exponential moving average, which is the support, by the way. In terms of resistance, 50,500 to 51,000, and then 51,300 to 51,500 is the kind of resistance that I'm looking at in this market. Quickly leave you with the quote of the day, and that would come up for you on the screen. This is interesting. I don't know who's written it, but the quote is good. When shifts and transitions in life shake you to the core, see that as a sign of greatness that's about to occur.
Okay, thanks a lot for that. Very helpful there. Sane advice coming through both on the markets and on life as always. Thanks, Anuj, for that. Well,